Alright, in today's video, I'm going to show you guys a quick little strategy that you guys can just copy and mimic me to pass all your challenges and combines within just one day or just a few hours. And this is how I was basically able to catch 2 winners and 2 losers, netting me 5-year sword overnight during the ADA session. So let's go over the strategy first. Basically, the first thing you want to do is obviously determine a trend. So if we just go in replay mode here, you can clearly see I usually use my indicator for my bias. Okay, if it loads here in a second, I usually use my indicator here for my bias. It's in the link in the description if you want to check it out. But daily bias is pointing bullish here. Also, if you just go to the 1 hour, this is the structure. Remember, you always want to start on the higher time frame and then go down to the lower time frame. So on the higher time frame, we have the 1 hour here as demand. All right, you can mark the 4 hour too, but I like to tend to refine it if it's a very big zone. So we got the 1 hour here, and if you just think about structure here, if we're bullish, price is going to make this new high. It's going to have obviously some sort of retracement mitigation cycle, and then it's going to start the expansion phase. And that's what I'm trying to catch here essentially. So once I see price, whenever you see price essentially continuously make new internal structure higher and higher, and it does not create big ranges, something like, for example, this, where it does create solid ranges here. In this case, after this solid range, this is like the last solid range that was created in price here. And then we just started just slowly climbing up. And when I start seeing this over time, over a long period of time, where it just continues delivering internal instead of focused on external swing structure, then I'm just thinking of new value is being created in the market. And this is also tying into what I talked about previously, which is called time theory. And essentially, you're just trying to trade with the trend here. All right, because there's going to be a lot of fake outs. Whenever we have price that internally trends like this, no one really ever talks about this ever online, mainly just me. But just from my personal experience trading, you're going to see a lot more smaller structure that you can trade off of. So that's what I was looking for here during the ADA session. Again, it opened up during here, but at this point in time, I was still looking for this high to get ran. So this was my weak high point at this point, and there's no really setup for me that was clear here yet. And if I did take one, it would have been like a FOMO trade. So I just waited here for my setup here. Price went higher, and it went into what I marked previously as 1 hour supply. So if we go to the 1 hour, this is the 1 hour here. And then you want to also refine things if you can. So I found and switched to the 30-minute. I noticed we have still a massive gap within this 1 hour, so I refined to the 30-minute. But the point is, even if we have the supply here, I'm still looking to long here, even if we're in high time supply. I posted this in the Discord private chat as well for the course members, and people were asking me also in the free group why I'm still longing in supply. And the answer is very simple. Whenever you're trading all-time highs, you want to just target weak highs. Highs are going to get ran, all right? Lows are going to be protected. And what that means is it's a lot lower probability that we will get a very big move coming from this supply. Again, there are a few times where you will get a big move. And this is not cherry picking. For example, here, there's this supply here that was unmitigated, as you can see on this 1 hour, and we got a big move from it. But we're playing probabilities here. And that's the point of what I'm trying to trade. I'm trading probabilities. And probability wise, more often than not, they get ran through. For example, there's 1 hour supply here. It got disrespected. It got ran through, took this as liquidity to then go lower. I can show you guys another example here too. Like for example here, there's a 1 hour supply here. But look, it just completely got ran through. You might have got maybe like a small scalp on a lower time frame on the 1 hour because it's still like a solid move on the 1 minute. But nonetheless, the point is overall direction wise, it still got ran through. Here's another supply, for example, it just got ran through, right? And finally, after getting supply ran through 3 times, you finally get a move off supply. Like even here, this completely got ran through on the lower time frame. You probably got complete failure L's if you're just trying to short this. So just keep in mind, try to focus on A+ setups, trade with the trend, understand liquidity and where it resides, and that's gonna significantly boost your win rate. So the setup I took here was my stop hunter setup. If you're not aware of this, you can check out the course down below. I go more in depth into explaining the setup, but essentially this internal low made this new internal high. All this structure here is too small structure for me to care, so I'm not going to take this here as my stop hunter. I'm going to use this more prevalent low here. And I took this and I took an L here essentially for -1, which is okay. You know, it's just a small loss. I know I trade high risk reward systems that I teach y'all, so losses don't really affect me. Now that we take the -1, you can see we later have another great setup right below. So I was thinking in this case, because we have new value, my draw on liquidity is extremely clear. I'm certain the trend is almost going to go higher. I'm not overcomplicating this at all. I'm not trying to outsmart the market. I'm just following the wave. And so I found this demand zone here off this unmitigated flip. Now you can also use here this PY below if you want to, but guess what? You will also miss trades. So just know there's a risk between using a higher PY and a lower PY. If you use lower PY, you might have a higher win rate, but you also will miss trades. And so I was willing to take a risk and have my limit order set at this PY here because we're in a small range. This is the range here currently that I'm looking to trade with because, again, because of new value, I'm not looking at all this, right? I'm not marking 50% tool from here to here. Usually you would, but because of how price is delivering here, I'm not going to. We're already in a 1 hour supply, and if price did want to come all the way back down to 50% here, this means the 1 hour supply held. And I'm not anticipating this 1 hour 30-minute supply to hold. So if you go to your trade here, essentially took the limit here, and then I just covered slightly below the PY. Now what you can't do also is cover both PYs to be more safe in case price did want to go lower to mitigate and then go higher. But you can see it cuts your risk reward in half. And so usually this is where math comes in, where I determine what is a more mathematical edge in my favor. I'd rather basically reduce my stop loss by twice, but I can get double risk reward out of the trade than try to catch something that has twice as less risk reward. Again, it's all dependent on how risk adverse you are, but for me, this is something that I have very high confidence in hitting TP and getting into the trade because we already have essentially, if you want to call it internal liquidity, taken out here, which was me previously, but that's okay. This is a valid setup that take any time, any day. And my TP was very straightforward. We have a break structure, so you can TP at the next high because this high internally is weak, or you TP at the next PY, which I talk about a lot within the course modules. You guys should already know this. This is very straightforward common sense, but 30-minute PY, that was already looking at for. So that was my TP. So if we just go back in time, so I want to replay this trade. This is how each trade looked like. So this trade here, first trade, again, stop hunter. You can have a limit order or wait for the candle closure. I usually wait for a candle closure to enter, and then boom, immediately got taken out. My stop loss was covering this other low below in case we take out two lows. Again, prior to mitigation, you can too, but the risk reward is not worth it to me. Usually I can get 3 risk reward is the most optimized and refined system I found for a stop hunter setup. So that's why I decided to take it with a tighter stop loss. It just works in my favor better in terms of my expected value. So then I have my entry here, and this is how the trade played out essentially here. You got like an internal sweep here. I remember this trade exactly because on ES, we made equal lows, which means the low did not get taken out. So just something you want to keep in mind. I know NQ has more internal sweeps from my trading experience. I know like guys also trade mostly NQ actually in the ETU group and in the team. So I've been trading more NQ recently just to test it out and stuff. But nonetheless, that's just something I've noticed. You want to have bigger stop losses if you're trading NQ. It's more volatile. It's similar with gold. So that was the first trade here, hitting TP for 4 risk reward. We hit 30-minute demand or supply, so I can expect some sort of retracement mitigation cycle. Where's my new range? It's from here to here. This is my new 50% range. I'm just waiting for price to give me confirmation. In this case, I took a more risky entry here using the impulse model on the candle break here because we have a small range, and this is an impulsive move in my perspective here. Now this sure would not be impulsive, but once you start delivering here, this was basically all gaps and imbalances here. So I took the impulse model here and it just hit my stop loss, which is okay because we have another entry confirmation and this PY was off the 5-minute. So if we go to the 5-minute here, you can also mark this too, but keep in mind, this is above 50%. This makes more sense below 50% here. Again, switch time frames until everything looks more clear. You can see just because you mark 15-minute does not mean 15 minutes is always going to get hit. It in fact hits the fair value gap of the 15-minute. So there's something to keep in mind. Whenever you go to a higher time frame, it's not always going to hit that time frame directly. That's why I always refine to like 1 minute or something, unless it's a massive zone. If it's a massive zone like these two here, I'm not going to really usually refine to the 1 minute. It's all relative depending on price and the time frame that you're looking at, how big the trading area is. So I took an IFG here. Why? Because this is the most extreme IFG marked by my indicator. Again, internal high, made a new internal low, and I entered, and my target is very straightforward. It's just at the next break structure here. Again, I could have held for short towards pre-state high if I wanted to, but I just know this is later in the day. Price is likely going to take longer to expand. We're almost towards the end of the kill zone, so I don't expect too much volatility. And I don't want to hold this trade overnight. Usually I don't like holding trades overnight, but you can see obviously played out for like 6+ risk reward if I held. But I'm okay with just taking this quick little trade because this is only like a 20-minute hold compared to if I held all the way, it would be a almost 3-hour hold, which I would be sleeping through essentially. So that's it for today's trade recap. Hope you guys did learn a lot and enjoyed today's video. If you guys did like, make sure to leave a like, comment, subscribe. And if you want to check out the premium ETU team in a group, click the link down below and I'll see you guys in the next video. Peace.